Woo! You know, it is that time, baby. Everyone's favorite time of the month. That is right. It's the stocks to buy. We got three lovely stocks for you today. Starting off with, as you see out here. That's right, stocks to buy December. Hope you dig this one. If you do, please let me know. All right, iRobot coming up first. iRobot. I've been talking about iRobot a decent bit lately. So what is going on with iRobot? Why do I like it? Well, part of it is a slight aspect of contrarian investment. Let's just look 1 year out on this guy. You know what? Let's pull out the 5 year. So really, what I care about is obviously the past year here. So we're looking at from highs around 130 on this stock, down around 66% this year. I mean, if we're looking year to date, this guy was starting off the year around 80. This thing's down 45% from there, but from the highs, this guy's around 70% down. So, what's the main reason for that? You might ask. Well, I personally don't think there's any issues with the fundamentals of this company. I mean, if we're looking at valuation, right now it's actually a company that I would consider to be undervalued at a PE of around 14. Now you might look at that forward PE and you might be like, well, that's probably it, and that's an aspect to think about. So, what's the reason for this forward PE being higher? Well, really, all of this is related to tariffs, entirely due to trade war. This is one of the items that is going to be tariffed at 25%. And that's really going to hurt a lot of the profit margin for this company right now. But the thing that I certainly would like to counteract that with is the fact that this is not a long-term pain. It shouldn't be, at least. We're working out some aspects of this trade deal to figure out something, and this shouldn't be a long-term pain for this company. Overall, I like the brand. I like what they have to offer. I mean, if we're looking down at this balance sheet, this company's got no debt to it. I like that. I'm a guy who loves no debt. You've already known that from me. You know that from me. I don't like debt. No debt. Profitability may hurt a little bit in the future, but if they're still going to be a profitable company, they're just going to lose a little bit of that profitability, so the EPS is going to go down, and that's where you see that forward PE increase there. So overall, I don't think the valuation is quite fair on this company. I think it should be quite high. It's been pretty well devastated for what I would consider to be unfair reasons. You see that price to sales right around 1. I mean, this is not an overvalued company by any means. So what is it that this guy has to offer here? So not only do you have your Roombas, which obviously, they're your robot vacuums. They'll vacuum the crap out of all your stuff. We also have the Abravas, which are a mop. That's right. Not only are these guys making the vacuum for you, these guys will freaking mop your floor to you. Your linoleums, your tiles, whatever. Does anyone else think the word linoleum's weird? I think it is. Just call it fake tiles. I don't like it. I've had many a linoleum growing up. But they're the number one cleaner not only for these hard surfaces, but they'll vacuum your normal house, all your carpet and everything. And it's fantastic. Have you ever seen one of these things work? It takes a little bit for them to actually learn the room. They got to do a couple test runs, and then they eventually end up learning your room, and they set up a route for themselves so they know what is going on, and they'll clean every nook and cranny that you need them to. It's fantastic. But did I forget the Terra? That's right. It means Earth, in case you were curious. That means Earth. Terra is Earth, baby. This thing's going to cut your freaking lawn. Obviously, this is a prototype, not necessarily something that's out there right now for consumer use, to my knowledge, but this is, what the crap? This 100%, and I do think there is chance for plenty of competitors. Obviously, Shark is out there that has similar products, but regardless, this is the future. That's just what it's going to be. We're getting to a point where we're too lazy to do our shopping in store, we're doing our shopping online, this is where things are going to go. We're not going to want to cut our lawn. We're not going to want to mop. We're not going to want to vacuum. These make it very convenient. We're all working on ease of life devices, and that's what my really thesis is here. And this is certainly an ease of life device, if you ask me. Ease of life, it's the future. I think that's just going to be good. iRobot is a company to take a look at. I'm a little bit down on my position, so trust me, I'll be looking to purchase some of this bad boy. Next, what do you got? Well, you know what? It's one that someone might think is slightly boring, but it's HP. H freaking P. Boring? Yes. Is there a reason for it? Yes. So don't worry here. I got plenty of reasons for HP here. And specifically HPQ. We're not talking about HP Enterprises. This is HP Incorporated, baby. If we're looking at the stock price here, right around $20. Year to date, this is a guy that's literally just flat here, down 2%. So naturally, in a year where we've gone up 30%, you want to see HP do something a little bit better. If we're looking 5 years out, what a shocker. This thing's pretty well flat on a 5-year basis. Only around 12% up is, in my opinion, relatively flat. And this is a guy who obviously fell into the good old the good old push in 2000. Gotta love it. And since then, it's just been a pretty shifty trader here. So why do I like HP? Well, I think they have a couple things going for them. We're gonna look at the fundamentals real quick. This is a company with fantastic valuation right now. A PE under 10, 8.73 is a fantastic price to earnings ratio. For forward, it's only 8.73, and then obviously trailing right now, it's 10. So not only are we expecting earning growth, we're already at a point where it's not overvalued by any means. I personally enjoy the valuation of this guy. It's a boring stock, and you know what? I'm okay with boring stocks. I don't know about you, but I'm okay with boring stocks. So let's look at, there's a couple things I always have to look at. Cash of $4.5 billion and $5 billion in debt. All things considered, I have no issue with that. If we're looking at a trailing 12-month operating cash flow of $4.65 billion, I mean, the cash will outweigh the debt in no time once they want to pay down. They'll have no issue paying down debt whenever they feel like it. So that's not a concern for me in my perspective. No concern there. What else do I love about HP? Well, obviously, I'm a dividend guy, and this guy pays me a dividend, a whopping, I can't really say whopping, 3.56% forward annual dividend rate. 3.5% dividend is lovely. It's a fantastic thing. And you know what? Speak of the devil, look on the right here. Save on a robot vacuum. Just telling you, they're listening to me. It's they pay a good dividend, and I love it. I love everything about it with a payout ratio of only 30%, so they have room to grow on that too. I mean, it's fantastic. They're doing a lot that makes me happy. And naturally, in the meantime, what we have going on here is Xerox's potential bid to take over HP, which was valued at 22 per share. Obviously, from here, this point, that's obviously an increase in terms of valuation for shareholders. Personally, I don't want this trade to go. I don't want this purchase to go into effect. So when they take it as shareholders, I'm going to be voting no on it. There's no denying it. I'm voting no. I don't want this takeover to happen at 22. I think proper valuation would be around 24 per share, in which case I still really would rather hold my HP shares. But if I get 24 a share for something I bought at, around 19 per share, I'll take that. I mean, I'm going to take that in the end of the day. But regardless, this bid's good for the share price, and it's really moved it up quite a bit. So nothing to complain about here. Whatever happens with this bid, we'll see. I'll take whatever the outcome is regardless. I think there's definitely value to gain on this, not only capital appreciation, but also in terms of your dividend as well. But obviously, they recently posted their earnings as well at the end of last month, right here with a nice little revenue beat and EPS beat 2 cents. So no concerns with profitability with this guy. I'm a fan of the company. And my final really main thesis here is going to be in the 3D printing business. And I talk about this a lot. 3D printing can be huge for this company. Not only just look at that. What a lovely thing. So 3D printing is really in its infancy, to be fair. And it's only going to really be a bigger factor in the future. And there's no denying how big of a factor it can be. If we're looking at projections, we can see here that we're expecting a projected annual growth rate of 25% in terms of revenue earned from 3D printing. Again, that's just fantastic. This factor of 3D printing is just the future. Less waste, less manufacturing cost. I mean, there's a very good point to 3D printing. It's quicker manufacturing. I mean, there's a lot of things going on here, and I think HP could be a front runner in terms of 3D printing. So I think this could be a big part for them. So definitely look at HP. Finally, I've been shipping it for a long time. It's Activision, baby. You can't stop me from talking about Activision because I think we're ready to get some shares again. I think I'm ready to buy some more. We're looking at this guy 6 months out. We want to look at it year to date. So year to date, guy's up 16.5%. Nothing absurd. If we're looking at a 5-year standpoint, though, this is really what I like about it. So obviously we had this big old run up for 4 years, for around 280% up, and then since the peaks, down around 34%. If we're looking max, again, you see this just gradual, fantastic chart, and then we've really tapered off in this last year. So what the heck can we do to bring this guy back up? And I think there's a lot we can do. Looking at the fundamentals of this company, I like them. Trailing PE of around 25 or 26. Nothing absurd there in terms of valuation. Forward PE of 22. Relatively fair value for a company like this. Nothing too absurd there. I don't think the valuation is overblown by any means, especially for the growth that I could see coming out of them. Next, you already know we're going to be looking at cash of $5 billion and debt of $3 billion. They have a nice balance sheet, and they're returning cash to it. Trailing 12 months, $2 billion in terms of cash brought to the balance sheet. In the end, if they're bringing cash, I love it. If they have more cash than debt, I love it. And in the meantime, we got to mention it too. Obviously not really a factor, but a dividend of 0.68. I mean, there is value there. It's not necessarily a huge factor, but they are paying a dividend, and guess what? I get paid to hold the stock. I'm not going to be upset with it. If I can get some dividend in the meantime, this is a payout ratio of only 17%, 17.5%. They got plenty of room to grow with this if they chose to do that. This is a biannual payer of dividend as well. If they wanted to grow that dividend, fine. If they want to work on reinvesting that into the business, I'm okay with it as well. Whatever works for this company, it's fine with me. So what is it that they have to offer that I'm interested about? Naturally, if you're looking at the different areas they have Activision, known for games, mostly like Call of Duty. They mentioned Skylanders. Sekiro in there is a good one, and Spyro the Dragon. We have Blizzard, which definitely World of Warcraft is a fantastic title by them. I haven't played it ever, but it drives a lot of popularity. We have Overwatch, again, drives a lot of popularity. StarCraft, Diablo, Hearthstone. These are just some bangers of addicting games that get people in. And finally, we have King, which is really an unthought of part of their business. But really, their main game is still going to be Candy Crush, the Candy Crush Saga, and the games of that ilk. There are plenty of different Crush games that they have out right now, and those are still growing users and still growing revenue for them as well. So King is a good part of their business, and it's also got a very good profit margin on King as well. So mobile games actually can bring in a lot of money, so it is something to consider on that. And on top of their gaming aspect, they also have partnership with Major League Gaming, and you already know that, which is the #1 online broadcasting network for professional level competitive gaming. I'm a sports guy, so this always seems weird to me that people will sell out arenas to watch people play games live. I don't understand it, but it is what's coming in the future. And that's fine. To each their own. It's a thing. Esports are going to be a very major factor in the future, and I think there's a lot of growth to be had for Major League Gaming. Right now, really their main deal is Overwatch, but there's plenty of room to expand that in terms of different games that they play. Major League Gaming, not for me, but I mean, a lot of people really dig it, and the people growing up nowadays, they really dig it as well. So, I'd rather pay to watch a football game live, but I'm not going to judge anyone's interest. They can like whatever they want. But if we're looking at some of the games they have here, you got a nice Call of Duty, Sekiro. That's right, just recently came out. Pretty big bop. Crash Bandicoot, another series they have, Overwatch, Diablo, which they just announced a new Diablo title, which should be fantastic for them. People are very much waiting for Diablo to return, and guess what? It's going to return for them. We have Hearthstone, we got StarCraft, and what a shocker, Candy Crush Saga, and all the other Candy Crush type games. Everyone loves these tile matches. It's just a good use of time, and everyone knows people are going to be spending money on their phone bill because they make it super easy. They make it super easy for you. All you have to do is link it with your phone bill, and you can just pay on your phone bill for whatever extra lives you buy or power-ups you buy. Ooh, they're genius. They're genius. And then you pay a bill that's like $200 for your phone bill, and you're like, what the crap happened? That's how they get you. It's smart. Very smart business. I like what they're doing here at King in terms of bringing in that cheddar. So those are my stocks to buy for December. Take a look at them. A little bit tech heavy. Don't get me wrong, but I love these stocks. I love them. I had to talk about them, and I'm going to keep talking about them. We'll see what we have in store for January stocks to buy. I'll be looking out, see if we get any deals coming up in December.